Hi there, people, largely of the United States. But we all feel like Europeans now, don't we? I really wanted to avoid coming across as a whiner about the continuing euro business, but this is the past 5 days on a minute bar basis of the euro. This is a pretty wide, I haven't calculated how many pips this is, but it's like, I don't know, about 300 or so. It's my dumb guess. Anyway, whatever it is, it's a big range. And each one of these jolts and spasms and it just are throwing traders everywhere for a loop. I was surprised myself noticing, if I'm pointing out this little fellow right here, that was, it looks like nothing, even in this, I mean, we're zoomed in real close. This is a minute bar chart, and even then it looks like nothing. But that caused pandemonium for about half an hour or more on Monday. Sorry, got interrupted there. Anyway, but the thing is, with the euro, and let's back this up a lot more, with the euro, one must ask themselves, when the plan is announced, what's going to happen? A, which direction, and B, how big? I mean, because it's just been, right now it's just little wiggles. And even those tiny wiggles are causing tidal waves in other assets. What happens when the real plan's announced? Will the market be so inured, if that's the right word, to all the rumors that it won't really care much anymore? Does the market have enough of a pretty decent understanding as to the framework of this that it really won't be big news anymore? I obviously don't know. Wish I did, but until then, just really trying to play it safe. From a charting perspective, I suppose the most bullish move that could happen on this would be to push onto the underbelly of that broken trend line, which would be a big move. There's no doubt about that. That would be a pretty damn big move. It would make, all these little wiggles just immaterial. There's a lot of overhead supply here with the euro. To me, the more desired outcome, which makes more sense from an analogous perspective, would be, as I pointed out many times, following this pattern. That is, we are about here right now with respect to this. I say again that just because the euro plunged, I mean, let's say the euro plunges after this, that's helpful to equity bears, but it's no guarantee. Because equities were terrifically strong here. I didn't do this chart beforehand, but let's do it on the fly here. Let's just see in real time what happened. Let's add the spiders to this chart and see what took place. All right. In this instance, the spiders couldn't have cared less. The euro plunged and plunged, and the spiders were terribly strong through January 2010, fell somewhat, and then made up for it all. And they finally fell in sync in May. So we had that brief little, that little 6-week, if you will, bear market in equities. Finally, they lined up. Now, the good news for equity bears is that things have stayed pretty nicely correlated since then. The blue bars here are the spider. The spiders, kind of thanks to QE2, did nothing but go up for month after month after month after month. It's actually, in retrospect, kind of breathtaking to look at just how smooth that was, even in the face of euro weakness. And then they sort of lined up again. These days, on a tick-by-tick basis, they seem to be one and the same. My point here, though, is that if, like me, you're an equity bear, don't bank on any euro weakness being your God-given right to equities falling. Because this in itself is an assumption. Even if that assumption of a falling euro comes true, there's no guarantee. Now, another remark I wanted to make about today's action was, I gotta say, I was surprised and disappointed that the news that we got didn't have a worse effect. Because basically, let's review. Last Saturday they said 8 days we'll have a plan. Here we are on Thursday, within hours of an announcement, and they totally backpedal. We're not going to have a plan. We'll have a meeting, and maybe Wednesday we'll have a plan. It's like dealing with a little kid. The story's always changing, and the euro rallied. That's peculiar, and a little disturbing. I mean, that's bad news. They don't delay the announcement in the meeting because things are going great and the negotiations are going well. They delay it because they're having trouble. That should be really bad news. We should have closed at the lows of the day on everything, and instead, from this point on, whoosh, the euro just shot higher. That's a little troubling. I did read. I haven't dug into this, but I was shocked to read this. My broker sends me a recap every day that there's chatter about credit agencies being banned from downgrading the countries in Europe plan. Huh? What? Are they? I mean, did I misread that? Who on earth has the power to ban credit agencies from down? That's their job. So this is like a form of censorship? I hope I read that wrong. I mean, that was actually offered as the reason that the euro was allowed to rally, because credit agencies wouldn't be permitted to downgrade. If that's true, somebody correct me here. That sounds wacky. I'm just repeating what I saw, though. Could be dead wrong. Okay, a few more charts. Now, a bit of a mixed bag, a lot of mixed signals here. In case I don't mention it later, God forgive me, I have a couple of long positions. I don't like that. I don't want that, but it's an insurance policy. I've got good old spiders, SPY, and GDX of all things, and you'll see why in a second. Here's the Gold Bugs Index, which, for all intents and purposes, is the GDX. Certainly not a bullish-looking chart at all. In fact, on the contrary, it's a very good argument for the bearish side. We did, however, today get this little kind of spinning top pattern from a candlestick perspective, and we are at the low end of this range. I mean, there's no debating that. We are at the low end of this range. If strength appears, this thing's going to easily get back up to the 550, 560 zone. No doubt about it, and probably very swiftly. So if I'm going to hedge, I'd like to have something that moves firmly and strongly in that direction. That's why I own some GDX. But we are really we're on the fence here. We're really on the fence. OIH continues to be a tantalizingly interesting short, but I have no position in it because if it cracks above even yesterday's high, it's going to put the notion of a easy trade here just in the toilet. So we're at the cusp of either falling fast or exploding higher. That's the nature of a trading range. It's the nature of being in this. We've been in this range for 3 months, August, September, October, and it's got to break out at some time. And when it does, it's going to be violent. And that's why I'm not getting too aggressive, because I'd rather that violence not dent my account too badly. The Comp Q, NASDAQ Composite, continues to be, I believe, bearishly situated. We're still beneath this red line, and there's room to rise and still be beneath it, but continues to be risky. The mid caps are kind of, you can see it sinking away here. That this curve actually helps you kind of visualize the weakening, the lower lows, the lower highs. Were a rally to take place, I think it would get no higher than this 920 level, which would be a substantial rally. But I think the top was made back in May. So in terms of fearing and shivering and quaking in our boots, the quaking is very intermediate term. It's not about a new bull market. It's just not. And let's take a look at the big boy, SPX. Kind of a small rally, medium rally, argument here. The small rally would be a boost to about 1250. A real game-changing type news from the Eurozone could push us up to the fabled 1340 level beneath this very long sloping trend line. That would suck, but it could happen. Again, we've got to get past the Euro news. We've got to get past the plan. The worst news of all to me today wasn't any of this price action. It was the mere fact that we were told Sunday and they yanked it away from us. We need a date when this thing is settled. Just done. What's the plan? Just tell us the plan and we can all move on with our lives. That's all I want. It's just comic. Lastly, the ES, one pattern I noticed on this is, and I haven't drawn it here, but there's a nice little diamond pattern shaping up in this area. Again, these are kind of hard to spot, but my eyeballs have done this enough to be able to spot them. But there is kind of a diamond reversal pattern sort of shaping up here. It's rather tilted. But if this turns out to be a top as we descend back to the lower portion of this range, that would kind of make a certain amount of sense. Anyway, very light news day tomorrow, Europe notwithstanding. We've had a lot of 8:30 a.m. and 9 a.m. EST type of announcements this week. Tomorrow is devoid of that completely. I think psychologically tomorrow it's all going to be about people anticipating the weekend and next week and what's going on with the Eurozone. We are prisoners we are prisoners in a penitentiary run by Merkel and Sarkozy right now, and they keep dangling those keys saying we're gonna get out, but our release date keeps changing. So frustrating. Anyway, I'm sorry I can't offer any definitive direction here, but at least I got a chance to share with you my own thoughts about what's going on and some of the things to look for. I have, as is so often the case, a boatload of little shorts and two longs, a medium-sized long on GDX and a big honking long on SPY, just in case. And that is it. So good evening and Godspeed.